All right, so we didn't really build on yesterday's gain, but we didn't really reverse it either. And so more of a neutral day today sets us up for so a little bit of ambiguity leading into the rest of the week. So I'm going to break down kind of what I'm expecting. The market forecast gives us some interesting patterns. We'll talk about the short-term pattern we saw today and its significance. We'll also kind of break down um, there's a very interesting market move in some of these intermarket relationships that we're seeing, especially in one of the important ratios that we take a look at. So we'll break all that down. And I'm gonna show you kind of my thoughts about the rate cut odds, right, that have been coming on. There's a lot of people comparing what we're seeing now to what we saw last September when we started the rate cuts there. Things are a lot different. And if we were to get to the same place as we saw last September, and to where we get a cut after cut after cut, then things are going to be pretty sour over the next few weeks or so as we head into that meeting. Otherwise, I think the odds of those cuts might be impacted in a way that maybe people don't expect, and that might actually be a really good thing for markets. So I'll break all that down. The sector moves today. It's basically a reversal of yesterday. And what does that mean to our expectations? We'll break that down. Then our trade idea is a stock that's breaking down itself in the technology space, but not breaking down from a bullish trend. It's already been relatively bearish, and it has earnings coming up this week. So let's go ahead and get started. Today is Tuesday, August 5th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. As you can see, we ended up down about 0.5% today. Not a big deal. We're still above the moving average by about 0.5%. The intermediate line, has already crossed below the market sentiment. Did that a couple days ago. And now it has crossed, which is a little bit of a red flag, and now it has crossed the 80th percentile, which is another little bit of a red flag, and that's why we have light pink shading here. So we have, again, a weak bearish posture, but that is about as weak of a bearish posture as you could possibly have at the 79.5% percentile. Very, very low. But still, again, above the moving average still rising. We haven't filled in the rest of that gap yet on SPX up to where we closed. What would that be on last Thursday? Where we closed there, but doing pretty good. The near-term line jumped up, closed almost above 60. So the near-term line actually crossed multiple lines here, which is generally a very good thing. When it crosses 40, on the day it crosses 40, if it can cross 50 and or 60, great. That's like a very, very ideal scenario. But here's the problem with that. That's the good news. The bad news on the short-term side of things is that we want the momentum line to be higher than the near-term line on that day that we're crossing above 40. And if even better than just being higher is that it's in the upper reversal zone. But today, because of the smaller range and because we closed down 0.5%, it actually finished in the lower reversal zone. And, before when we had this, that's a bullish intermediate confirmation signal because, you still have the strong bullish posture. Well, we don't have a strong bullish posture anymore. We have a weak bearish posture. So now that's not a intermediate confirmation signal. So again, what's the likelihood that the near-term line will jump up above 80 tomorrow? It's obviously there's a decent chance because anything can happen. But the likelihood is actually lower because of that versus say, again, going back to the day before I left and the near-term line crossed above 40 and 50 and 60 on that same day, and the momentum line finished at the 92nd percentile. So in this day right here, very good bullish short-term pattern. We came off that low, and boom, we had a nice, we talked about like before I get back, we'll probably have the near-term line will probably stay up in bullish territory for the whole week I was gone because of how bullish that bounce was, and that ended up being the case. And now here we are. Not so bullish of a near-term bounce, and we'll see how that implicates this move, whether or not we end up kind of failing here with a near-term line at a at a much slower peak than what we really want to see. Again, it can still jump above 80 tomorrow. We could still have a bullish pattern. We could still just rock this and take off to the upside. But again, the odds, it's all about probabilities. And so the probabilities are lower now than they were, say, on that day, July 17th, when we had the kind of pattern where we did cross both lines, but the momentum line was up here instead of being down here. So that's what both the S&P and the NASDAQ 100 are both showing. Again, light pink shading. The near-term line did not cross 60 there either, but it did cross 40 and 50, and its momentum line actually fell to extreme low, right down to the 5th percentile. So you've had quite a few lows back to back to back here on the momentum line. So a little bit of weakness that we're seeing right now in some of these major indexes. The Dow Jones Industrial Average did not fall as much. It actually almost closed above the moving average. It's only 0.4% below. The near-term line, you can see, almost crossed back above the intermediate line. See, now that cross matters because the intermediate line is between 20 and 80. So that's almost bullish there, again, crossing both lines, but the momentum line being down instead of up. And then finally, your Russell 2000. It actually had the best day. It was actually up over 0.5%. It's the closest to getting back above the moving average at just 0.14% there. And its near-term line did make it. So again, it can do it without the momentum line. It's not as common. The probabilities are lower. And it might not stay very long. That's the other end of things. It might get up there, but it might not stay there like we want it to, right? We want it to get up there and then stay there for a while and have a really good run. And that generally happens if the momentum lines up there too. Again, doesn't have to, but it's the probabilities are better, and that wasn't the case there. But at least you had the strong momentum line, or near-term line, getting pretty decently high, following up the cross above 40 yesterday, to 47. The momentum line was at least higher on that day, and then now getting all the way up above 80. All right, well, that does it for our preview video. You can see the full-length version of this, about the half-hour-long video, at marketscholars.com with the link that's down below in the description, as well as in the pinned comment down there. You can sign up again for all of our subscribers at Market Scholars, get access to that video, starting with our foundation tier, which is opened up for just about everybody at $29 a month. You get access to the Market Outlook video. You get access to the Market Outlook live video, where we place a trade, one trade every day. We also talk about in the Market Outlook, and then we track it. You also get access to our Market Outlook live trade tracker. So we manage all those trades day after day. We close, we enter new ones. We track all those trades from the beginning of the year. Again, we're up about $13,000 so far year to date on the trades that we made in the first 6 months of the year. So it kind of shows, whether $29 is worth it, or if you do the year, you get the yearly versions for $299, so you get 2 months for free. If you sign up for our basic subscription, the free subscription, you actually get a free month, a 30-day trial to our foundation tier. So again, thank you very much for watching. Remember, subscribe to our YouTube channel, hit that thumbs up icon down below, share this video with others. Follow me on Twitter, Facebook, all the social media. Like our content there. Have a great rest of your Tuesday night, everybody. We'll see you all tomorrow.